Good morning, everyone. This is Srikanth Rajan, and welcome back to the Stock Market Podcast from MPIinvest.com. So, coming to the market yesterday, the market absolutely followed the day as exactly as it happened on Monday. The market saw a gap down, went down, and from there a continuous recovery and closing positively at the end of the day. So things are looking interesting at this point of time because, of course, there was a concern about the Federal Reserve minutes meeting minutes coming out yesterday evening, Indian time. So that's exactly why markets were kind of cautious. But then, one day before expiry, the markets exactly kind of saw a rally upwards. This actually means that the market is looking stronger at this point of time, or simple that the buyers are feeling that the markets are at a good price to actually start buying. So that is actually a great sign. So now, like we discussed yesterday, the market has to be driven only by news because the quarterly results are over. Now it's only the news in the market that's going to drive the market at this point of time. So yesterday, if you see, there was major news in Infosys, and that actually led Infosys and the entire IT pack going higher in spite of weakness in Nasdaq. So that was a good move. But then yesterday again Nasdaq has fallen down after Indian markets closed. So basically, what happened was the Federal Reserve minutes came out, and in that, the Federal Reserve members have actually gone divided on the expectation of increasing rate hikes. In fact, what they say is that the inflation worries are far from over, and there are high chances that the inflation can start spiking up again. So that is not a great thing, and that's exactly why we could see the entire of US markets falling yesterday, and it is actually continuously falling for multiple days now, and it is not taking a support. So at this point of time, yesterday we could see Nasdaq again down by more than 1%. So that means again that is kind of going to hold back the markets. So if you see, naturally, when the US markets have closed in negative, Asian markets are also trading in negative. But interestingly, like I spoke yesterday, the mutual fund investments are growing, SIP investments are growing, and that's what is kind of taking the market or holding the market from falling. All the Asian markets are weak, global markets are weak. So even if Indian markets are strong, they don't have the power to go further until the global market starts moving. So the only thing is, in such situation, when global markets falling, India doesn't fall much, but even 1% rally in the global market can take Indian market up by 1 to 2%. So at this point of time, however, the markets are in a phase where it wants to go up, but the global sentiments are not allowing it to go up. The people are not going to allowing it to go up, and that's the situation at this point of time. So definitely 20,000 at this point of time is looking impossible at this point of time. So as on today being the expiry, I am expecting Nifty to close or close or expire within 19,250 to 19,650. So this is my expectation. Of course, this is a safer number I am giving because the markets itself are not in a great position to give a proper, more concrete number. So this is something that I'm expecting for today. Apart from that, if you look at the market, we could see some weakness in metal stocks, majorly because of China. So Chinese market is falling continuously. So naturally, metal stocks are also falling. So that is something which is not holding up right now. But at this point of time, focus is also, of course, on ITC because ITC results were decent, and then ITC has not made a much bigger move. So that is also on the counter. But for today, looks like IT rally cannot sustain further because Nasdaq has been weak for the second day. So looks like the only option left for today would be the banking sector, which has been really bearish for quite some days, especially HDFC Bank. So focus will be on HDFC Bank on how it will move because it's fallen enough. Looks like it should take some support at this point of time. Fundamentally, it's a very strong company, but then yes, the FII selling is not keeping it stable. So at this point of time, if you see yesterday, FIIs were on continuous selling mode, but yesterday on paper, of course, it looks like FIIs on a buying mode. Yesterday they bought for almost 700 crores, and also DIs have actually bought back. So yesterday was net buying by institutionals, but still market did not show that positivity. It was positive, but not that positive as both institutions buying. Reason was simple. All the FII money which came in was nothing but from GQG partners who have again bought or increased stake in Adani Group. So that is something. It was a bulk deal of Adani Group which actually kept the market up. I would say not up. I mean, which actually kept the net positive buying for FIIs. But otherwise, FIIs have again sold in the Indian market. So until FIs come back to start buying in the market, the momentum on the higher side is actually going to be on a pause. So that is something that needs to be watched. So let's see till when the FIs are not going to buy. But at least one good thing is FI are not selling big. They are selling small numbers, but that's not a big number. That's exactly why Indian markets are more stable. Unless FI starts selling big, the markets can continue to be stable, and 19,250 to 200 range would be the very good support at this point of time. So based on that, let's see how the market behaves today. Today being an expiry, markets are going to be exciting. And of course, we are already seeing some decent profit for this week. So looking forward to a safe close of trade and taking in a position for next week. That's it for now. This is Srikanth Rajan signing off. But before we leave, of course, do remember to press the like button if you love the content that we share. And if you're not a part of MPA community yet, you can join that free of cost. All you need to do is send us a WhatsApp message on this number mentioned below. Have a great day ahead, great expiry ahead. We'll catch up tomorrow morning.